Well, welcome everybody to a very special episode of The Biz. My name's Eric Palmer. Thanks for joining us. Now, in today's show, we're going to talk about a brand new term insurance product that just hit the market called Phoenix Safe Harbor. And here to address this with us is Charles Truhlar, a certified financial planner and a representative with Phoenix Safe Harbor. Charles, welcome to the show.
Thanks, Eric.
Now, break something down for us here, Charles. We typically talk about term insurance quite often in this industry. It's a death insurance. If I pass away, my beneficiary is going to get a lump sum of tax-free income. But this brand new product is a term with living benefits. And although we've seen a couple of these products kind of come out to the market recently, this one truly stands out. So what I want to do for the audience today is really talk specifically to the consumer out there. I know on our shows we address the financial planner quite often, but really this is a product for the average consumer out there. So first things first, tell us about living benefits. What does a term with living benefits mean?
Sure, so let's talk about where we came from versus where we're at today. Where we came from, the old death insurance, just as you described it. You had to die to receive a benefit from life insurance. Well, but back then a heart attack was a death sentence, or cancer was a death sentence. Nowadays with modern medicine, we're living through that stuff. So a heart attack doesn't necessarily mean grandma's gone.
Right.
Cancer, same thing. So when we live through those, where is the money going to come from to sustain us during those times and after those times? Paying for the medical bills, paying for the lost time at work, all those other things. So now we've bundled these together in what you've called living benefits. That's going to cover chronic illness, critical illness, terminal illness. There's even an unemployment rider in most states that you get with this policy.
Okay, so quickly break this down for us. You mentioned critical, chronic, and terminal illness. Now, terminal illness we're pretty familiar with. I think we see it in a lot of different policies. If I'm terminally ill, it's going to give me some additional benefit that comes out of the death benefit overall in my policy. But tell us more about the chronic, and specifically tell us about the critical illness, because in my opinion, that's the biggie here.
Yeah, you bet. So chronic illness is what we might call long-term care type of coverages. So two activities of daily living. You need help with just living on a regular basis. Maybe you're in a nursing home. That's the type of benefit that chronic illness is going to cover. Critical illness is becoming so prevalent today. Every 40 seconds, someone suffers a stroke in the U.S. Cancer is diagnosed every 30 seconds. Someone has a heart attack every 26 seconds. So this is happening all the time. This is the critical illness part of the policy where most people are going to need the access.
Those numbers are staggering. Let's think about this a second. Every 26 seconds, somebody suffers a heart attack. Now, with modern medicine, we're living through this stuff, as you mentioned here before, right? So, and quite often, it's actually the majority of the time we're living through this. So break this down a little bit more specific for me. If I survive a heart attack, I'm one of the stats at the 26 seconds. I'm on the golf course, and that'll probably be where I'm actually going to be at when I have my first heart attack. And I drop to my knees, I have my heart attack, I survive. I have a 20-year term with $500,000 of death benefit. What's this policy going to do for me?
So unlike some of the competition out there, we can take up to 95% of that $500,000 in cash. And this is cash in your pocket, Eric. This isn't to pay just the medical bill. We're going to pay the hospital, or we're going to reimburse your bills. We're going to give you this lump sum of cash to not only use for those medical bills, but maybe lost time at work or some golf lessons.
Right. Well, I'm probably going to need the extra golf lessons at that point. So what you're saying is, I have a $500,000 policy. I can get a $450,000 check while I'm alive to cover all the medical expenses, the lost time at work. What happens with the extra 50 grand left over?
So you get to keep it. Not only do you get to keep it as life insurance, there's still a benefit that's in there. So for a reoccurrence. So this is unlike a lot of our competition too. A lot of folks will suffer a heart attack, and then 2 or 3 years later there's a recurrence and another heart attack. Or it's very prevalent with cancer. You get diagnosed with cancer, you get a clean bill of health, and 2 years later it comes back to haunt you. So on our policy, you're able to not only access the money up front, but if it happens again, you can go back and access more all the way up to that 95% mark. Now, once you've exhausted the 95%, you're left with 5% in actual death life insurance.
Right.
Now, you're not paying for your full policy anymore. We're going to take that premium down, so you're only paying for what you have left.
So the premium adjusts based on however much life insurance is left over, or as we've been calling it, pretty much it's death insurance, whatever's going to cover my spouse or my beneficiary at the time I decease.
You got it.
Now, what's interesting about this stuff is we typically think about having to buy these coverages separately. So let's walk through some cost analysis here for a moment. So long-term care, very expensive, right? On a monthly basis, it's one of the most expensive types of insurances that you can purchase. Critical illness standalone policies, those aren't cheap either. And disability insurance if I need the unemployment coverage. And then, of course, the life insurance in general. So Give me an idea of just how much a person's saving on average if we're not buying all of those individual insurances, but we're buying this bundled policy.
We did some sample calculations on a 40-year-old male, and what we found is the critical illness piece of it is very expensive. The long-term care piece, as you mentioned, is expensive. And on a side note, most of the time we're selling long-term care to older folks, and it's hard to get at that point.
Right.
So this takes care of that problem. So you've got your critical illness piece, your long-term care piece, and then of course your life insurance piece. On someone that's 40 that's in relatively good health, that would cost them $350 to $400 a month to piece those things together in their portfolio. We can do it with Safe Harbor for $50 a month.
So I can choose $300+ in premium a month or $50 in premium a month. Now, granted, I'm probably sacrificing a total volume of benefit, right? But how many people can really afford $350 a month for insurance? I mean, most of us are trying to make ends meet with the mortgage. We've got the cars, we've got the kids. So I can get a relatively decent amount of benefit for what you're saying is practically about 20% of the overall cost.
You got it.
Well, you know, I could spend time talking about this all day long. I think it's one of the most brilliant products that I've ever seen hit this market. But I want to kind of address a couple more things real quick. You typically have to stay within budget. We understand that the average consumer out there, we have a price point in mind. There's a place we have to be, especially when we have the ability to shop all of these different products and benefits out there. I urge everybody that's watching this show to contact Charles and get a quote and just find out for yourself how much this is. At the end of the day, you don't want to burden your family while you're still alive. You don't want to burden your retirement accounts and have to live on less because you don't have money to cover the treatments. And again, remember the stats that we just talked about. 26 seconds having a heart attack, every 40 seconds having a stroke. That's a major number, and it's probably only going to continue to be that way as we continue to see modern medicine. We're going to live from these things. So find yourself a pool of money to get this treatment covered from. Find yourself a pool of money. Contact Charles and get yourself a quote. Charles, end the show telling us how to get hold of you.
You're going to love how competitive it is, and you're going to love how exclusive it is. So call us at 855-543-9036. Jump on our website at phoenixsafeharbor.com or text Safe Harbor to 313131.
Pretty simple, guys. phoenixsafeharbor.com. 313131 on the text, and then you got the 800 number there as well. So again, Charles, thanks so much for being here. We truly appreciate your knowledge and your insight. And again, everybody that's watching the show, we appreciate your time. Get yourself a quote on this product. I'm telling you, it's one of the best things I've seen in the marketplace, and we look forward to seeing you next time. Thanks.